What if everything you've been told about the American dream about freedom, hard work, and opportunity was built not on those ideals, but on a quiet night inside a private train car in 1910? What if the true story of the Federal Reserve isn't a tale of stability and progress, but of secrecy, control, and an engineered financial dependence that still dictates every paycheck, every price tag, and every crisis you've lived through? You feel it, don't you? Every time the cost of groceries jumps inexplicably, every time your savings seem to lose value overnight, every time your rent rises faster than your raise. We call it inflation, but what if that word is just a polite disguise for theft? Tonight, we're peeling back the layers of a cover-up that has been running for over a century. Because in 1913, America didn't just create a central bank, it signed away its financial sovereignty to a private syndicate of elites operating under the illusion of public service. This wasn't a vote by the people, it was a transfer of power from democracy to debt. So, before we go deeper, let me know in the comments, where are you watching from? Are you in the US, Europe, Asia? Because no matter where you are, the fingerprints of this system are on your currency, your taxes, and your time. Stay with me and make sure you hit that subscribe button, because what you're about to hear isn't taught in schools. It's the unfiltered truth of how America's financial freedom was traded for control, and how that same system still writes your destiny today. Let's rewind to the early 1900s. America was booming: railroads, oil barons, new money everywhere. But beneath that glittering surface was pure chaos. Banks were failing constantly. Financial panic struck like storms every few years. In 1907, a single rumor sparked a market crash that wiped out fortunes overnight. The public demanded reform. The newspapers, many owned by the same elites, screamed for stability. And that, my friends, was the perfect opening they needed. In November of 1910, under the cover of night, a private train left Hoboken, New Jersey. On board were some of the most powerful men in American history, men who owned banks, newspapers, and entire industries. They told their families they were going duck hunting, but not a single duck was ever shot. Their secret destination, Jekyll Island, a remote spot off the coast of Georgia. Their mission, to write the blueprint for a financial system that would make them richer than kings and make the rest of the nation permanently dependent on their credit. Sound familiar? When the 2008 crisis hit, the same story played out, different faces, but the exact same mechanism. The elites caused the collapse, and then they bailed themselves out with your money. In 1913, the excuse was panic and reform. In 2008, it was too big to fail. At Jekyll Island, names like Paul Warburg, partner at Kuhn, Loeb & Co., Frank Vanderlip, president of National City Bank, Henry Davison, a senior partner at J.P. Morgan & Company, and Senator Nelson Aldrich, whose daughter married into the Rockefeller family, gathered in total secrecy. They were fierce competitors in public: Rockefeller's man, Morgan's man, the European banking interests. But on that island, they spoke with one unified voice. Their idea was simple, yet absolutely brilliant: create a central bank that looks and sounds like a government institution, but is actually owned and controlled by the private banks themselves. The public would be led to believe it was nationalized, a part of the government, designed to protect them. But the profits, the power to issue credit, the interest payments on the national debt, all of it would flow back to the very people who created it. Does that sound familiar? Every time the Fed announces quantitative easing or emergency liquidity, the stock market cheers and the wealthy get wealthier, while your savings account slowly bleeds value. It's the same design, just updated for the digital age. When President Woodrow Wilson signed the Federal Reserve Act into law on December 23, 1913, just 2 days before Christmas, when most of Congress had gone home for the holidays, it was presented as a great patriotic reform. The headlines read, "A safer, stronger banking system for the people." But behind the scenes, the very bankers who had caused the previous panics now controlled the only institution that could legally print America's money. Wilson himself later wrote in regret, I am a most unhappy man. I have unwittingly ruined my country. A great industrial nation is controlled by its system of credit. Our system of credit is concentrated. The growth of the nation, therefore, and all our activities are in the hands of a few men, and that is the heart of the 1913 cover-up. It was never just about money. It was about control over every future boom and bust, everywhere loan, every bond issue, every single taxpayer. They wrapped the machinery of perpetual debt in the illusion of independence. And more than a century later, that machine is still humming along, more powerful than ever. Every time the Fed changes interest rates, entire nations tremble. Every time they print another $1 trillion out of thin air, inflation creeps closer and closer to your doorstep. Does that sound familiar? The more things change, the more the money stays theirs. But here's where the story takes its darkest turn. You see, the Federal Reserve wasn't designed merely to stabilize the economy, it was engineered to make instability profitable. Now, we get to the shadow mechanism that makes it all possible. Fractional reserve banking. This is the almost magical ability for banks to lend out money that they don't actually have. The Fed didn't just centralize credit, it created the infrastructure for infinite debt. Every dollar you deposit in a bank doesn't just sit there. The bank is allowed to lend out a large portion of it, say 90%. So your $100 deposit becomes a $90 loan to someone else. That person deposits the $90, and their bank then lends out $81 of it. This process continues, creating new money from nothing but digital entries and promises. It's all backed by trust, a trust that is managed, inflated, and deflated at the will of the central authority. And when the banks inevitably overextend themselves and the system teeters on the brink of collapse, the Fed steps in not to punish them, but to protect them, to bail them out, to make sure the game can continue. Your losses are socialized across the entire population through inflation and taxes. Their profits are privatized. That massive wealth gap we see today, it's not a bug in the system. It's a feature. It's the design. The architects on Jekyll Island knew that whoever controls a nation's credit controls the nation itself. Wars could be financed on borrowed money. Markets could be manipulated with the flick of a switch. Entire governments could be indebted and thus controlled. And through it all, the illusion of a public institution would keep citizens believing they were safe, and that it was all for their benefit. Fast forward to the modern age. Digital dollars, invisible credit, and a term you hear all the time, quantitative easing. It's just a fancy phrase for creating trillions of dollars from thin air. While this new money floods into financial markets, propping up asset prices for the rich, your paycheck stays the same, but it buys you less and less. Sound familiar? It's the same system, only faster, more efficient, and with even less accountability than before. But the true twist in this story isn't just about the mechanism. It is about the names behind it, the families and institutions who still profit from the very structure they built back in 1913. You've heard their names. You see their logos every day. They own the news networks that shape your opinions, the investment firms that manage your retirement funds, the political think tanks that write our laws. You won't believe the names that still sit at the very center of this web. And the receipts, the evidence tying their influence directly from that secret meeting in 1913, all the way to 2025, are even wilder than you can imagine. Have you ever wondered who really controls your money? It's not the government, not exactly. Let's pull back the curtain on one of the most powerful and misunderstood institutions in the world, the Federal Reserve. The Federal Reserve operates through a system of 12 regional banks, which sounds official, right? But here's the twist: the real power doesn't lie with the government. It's held by a private board of governors. And while these governors are appointed, the ultimate authority rests with a network of commercial banks that own stock in their regional Fed branches. That's right, private banks own the very institution that prints public money. The name itself is a masterclass in deception. As Congressman Louis McFadden pointed out way back in 1932, it is not federal, and it has no reserves. The name is camouflage, an illusion to make you believe it's a government entity working for you. But how does this system actually work? It's a three-step waltz that dictates our entire economy. First, the US government needs money. so it issues bonds. Think of these as IOUs, promises to pay back money in the future, with interest. Second, the Federal Reserve steps in and buys those bonds. But where does it get the money? It simply creates it, conjured out of thin air with a few keystrokes. This isn't printing money in the physical sense. It's just digital entries on a ledger. Third, this newly created money enters the economy through private banks. They loan it out to people and businesses, but with a catch: interest. This is the crucial part. The public, that's you and me, has to work, earn, and pay taxes just to service the debt created by this interest. Every single dollar you hold in your hand or see in your bank account actually represents someone else's debt. It's a system of perpetual debt, because if everyone somehow managed to pay back all their loans, the entire money supply would simply vanish. The consequences of this system are staggering. Since the Fed was created in 1913, the purchasing power of the U.S. dollar has plummeted by over 96%. Think about that. A dollar today buys what for cents bought a century ago. The Federal Reserve's own balance sheet tells the story. It started in the millions, but today, it exceeds a mind-boggling $8.7 trillion. Where did all that money go? During the 2008 financial crisis, a staggering $29 trillion in secret emergency loans were channeled through the Fed to global banks and corporations. They called it a rescue. But who was being rescued? After 2008, the wealthiest 1% captured 84% of all new wealth created. This isn't a coincidence. It's a feature of the system. They have a name for it every time. In 1929, they called it a crash. In 2008, a rescue. In 2020, they called it stimulus. But the underlying mechanism never changes. The Fed creates money, Wall Street reaps the profits, and Main Street foots the bill. That inflation you're feeling every time you go to the grocery store or fill up your car, it's not an accident. It is a hidden, invisible tax. Every new dollar created silently steals a little bit of purchasing power from the dollars you have worked hard to save. And when saving is punished, what happens? Dependence is created. A population that can't build wealth is a population that relies on the system. Now, they're preparing for the next phase. The future is digital, and so is their control. Central bank digital currencies, or CBDCs. Imagine a system where every single transaction you make is tracked and monitored in real time. A system where your account can be frozen at the push of a button if you make a purchase they deem incorrect. In 1913, they took control of money. Soon, they could take control of your behavior. Let's be clear, the Federal Reserve was never designed to protect the people. It was designed to protect a system, a self-perpetuating cycle of debt that ensures financial dependence for the masses and immense wealth for the few. It's the replacement of tangible wealth, like gold or property, with a digital illusion. It's the transformation of citizens into consumers, and consumers into collateral for an ever-expanding mountain of debt. This all began with a secret meeting on Jekyll Island in 1910. A group of powerful bankers boarded a private train, traveled in secret, and hammered out the plan for the Federal Reserve. They promised stability. They promised this time it would be different. But where are we now? The machine they built over a century ago now spans the entire globe. Trillions of dollars move at the speed of light. Every crisis, whether it's a pandemic or a war, becomes just another opportunity to consolidate power and wealth. The next collapse won't come from the trading floors of Wall Street. It'll come from code. Algorithms will decide who gets credit. Artificial intelligence will optimize debt collection. They are even talking about digital currencies that are programmed to expire if you don't spend them fast enough. The deal in 1913 was trading some of our economic sovereignty for perceived stability. The next deal will be trading our privacy for permission to participate in the economy. But knowledge is power. Understanding the system is the first step toward resisting it. Every time you question the official narrative, you reclaim a piece of the freedom that was signed away over a century ago. Every dollar in your pocket is a reminder that control doesn't always come with iron chains. Sometimes, it comes wrapped in an eagle and a promise. So I'll leave you with this question. Are we any wiser now? Or are we just walking the same old path in fancier suits? The cover-up that began in 1913 didn't end. It just evolved. And as long as we stay silent, the system keeps winning. But the truth is still out there for us to uncover. If you're ready to dig deeper, question louder, and see through the illusion of stability, make sure you subscribe and hit that notification bell. Share this video with someone who needs to see it, and let me know in the comments where you're watching from. This global story isn't over yet. Thank you for watching.